Hi guys, welcome to my channel, and today we will discuss about semester first assignments for financial accounting subject for April 2022 cycle. So as we had discussed earlier as well in the previous videos, that April 2022 cycle is specifically for those students who are not able to give the exams in the December 2021 cycle, or might be due to some reasons they might get the copy case. So this cycle is not for all the students, but yes, for a specific group of students. And today we will discuss about the subject financial accounting. As we already know, it's more or less it's a numerical based subject, and in which we just need to see how we can just put up additional theoretical part, because the questions we need to cover around 1000 words, not exactly 1000 words, but around 800, 700, 800 words to it. So let's see the questions and how we can just refer to the books with chapters or with page numbers and what needs to be written in each question. So let's quickly see the assignments. So this is the assignment for April 2022 cycle. It carries of 30 marks. It has three questions, as it's the similar one in other subjects. Each question carries of 10 marks. The very first question of 10 marks, second question of 10 marks, and the third question has two parts, third A and third B, and each comprises of 5 marks. And the word limit for every question is, for the first question is 1000 words, second question is again 1000 words, and for third it's third A for 500 words, and for third B 500 words, right? So this is all the questions. So let's see each of the question one by one and see what needs to be written. So the very first question is, analyze the following transactions for Surprise Limited using the concept of accounting equation comprising of assets, liabilities, and equity. So very first one is commence business with cash. Second is purchase equipment for cash. Third one is purchase furniture worth rupees this on credit. Fourth one is purchase raw materials for this amount against the cash. The fifth one is deposited cash in the current account. The sixth one is sold goods in the and received a check against the same. So let's see what needs to be written and which page numbers to refer. So we need to refer page number 5, page number 8, page number 16, and illustration and the table. What needs to be written? So firstly, we just need to give a brief introduction about the asset, liability, capitals, or the owner's equity, what is this all about. After that, we just need to specify what is the accounting statement. The next comes as the analysis of the accounting transactions, and lastly we need to analyze the transaction which are mentioned in the case study. So let's go to the book and just see page number 5. I'm not sure it's page number. Okay. Yeah. So if you see the page number 5, it's mentioned that what is asset. So you just need to give a brief that, okay, asset is all about which is controlled by the entity whose cost at the time of acquisition. So all the material which are holding by the company, that comes under the asset. Then next is the liabilities, which are claims to the assets. And lastly comes as the capitals or the owner's equity, the actual amount which is owned by the investors into the company. So firstly you need to explain these three things. Then next comes as the page number 8. So if you go to the page number 8, it's mentioned about the balance sheet. So balance sheet, it shows the relationship which we call it as the accounting statement, which mention assets equals to the owner's capital plus liabilities. So you just need to give an explanation about to this. Then next comes to page number 16. So if we go to the page number 16, page number 16. Okay. So, okay, this comes as the analysis of the accounting transactions. So, here the example is given where a certain kind of transactions are specified, and explanation is given for each and every transaction. In the similar aspect, the case study which is being provided in the question, you just need to give an explanation that, okay, this is an asset, this is a liability, or whatever it is. And after that, you just need to show it into the tabular format. This is just for reference one. This is again, the formula remains the same, that asset equals to liability plus cash. So anything which you are putting at one side, like if you are putting 3 lakhs over there, then on the right hand side either it comes into the liability or it comes into the capital part, right? So let's see what is being all about. So commencement of a business with cash amount of 5 lakh rupees, so it's basically the owner's equity, the owner's amount, so this comes into the main part. Then next comes as the purchase equipment. So purchase equipment is always be a part of an equity. Then purchase furniture on credit, so it comes into the asset because you are just purchasing a furniture and parallelly it's on credit, so it's your liability to pay the 50,000 from India Mart. Then purchase raw material against cash, so it's an asset for you. Then deposited cash in the current account. So if I talk about the current account, so it's the owner's equity, and again it's a part of the cash account, so it comes under the asset part. The last comes as the sold goods and receive a check against the same, so it again comes into the part of your cash because somebody, you have sold it to somebody else and somebody has paid you the cash to a check amount to you, so it comes under the part of an asset for you, right? So in this way you just need to explain all these transactions and you just need to draw it, show it into a tabular format to just show the relationship between the asset liabilities and the owner's equity. So the first question is pretty much clear. Now moving to the second question. The second question says the cash flow statement complements the statement and the balance sheet, summarizing all the cash inflows and the outflows transactions in the in the company within the financial year. However, there are two different methods of preparing the cash flow statement, direct and indirect, and list the differences between the direct and indirect method of the cash flow statement. So it's a straightforward question where you just need to give an explanation about the cash flow statement and you just need to specify that there are two methods, direct and indirect method. So what's the difference between them, and what are the how it is being prepared. So it's very straightforward, so refer to the page number 7. So if I go to the page number 7, I think it's on page number 10. Okay, so going to the page number 7, so it says about the income statement. So you just need to give an explanation about the income statement. Then next comes as the cash flow statement. You need to give an introduction to the cash flow statement. Then next comes as the page number 146. So if I'm going to the page number 146, there are two methods. The very first one is the direct method. So in direct method, you just need to explain that gross receipts and close cash statements are shown under the major classes, and you just need to explain it. Then next comes as the page number 148. In its mention about the indirect method, again you just need to explain that how the net profit and losses are disclosed in the methods, and this is the way how it's being explained. Then going to the page number 153, if I go to the page number 153, so here it's the format of the cash flow statement. It's a direct method, and the second one is the indirect method. So you just need to show it into the tabular format in this way. And while reading this thing, you will get a number of differences between the direct and the indirect method. So maybe you can just show it into a tabular format to get a better understanding to it, right? So this is a very straightforward question. Then next question comes as a third A. It is saying that following information is available for the two companies Ace and the Pace Limited. There are some particulars which are being provided like the long-term debt, equity, current assets, current liabilities, profit, and the revenue. So we need to compute few things. The very first one is the debt equity ratio, and the second is the current ratio for both the companies. So let's see. Page number 174. Going to the page number 174. Okay, so this is debt equity ratio. So you just need to explain that this relates to a debt to the equity of the owners and of funds, and you just need to explain that it comes under the part of long-term liabilities, and you just need to explain the things about the debt equity ratio. You can just read it and write it down in your own words. Then after that, you just need to write the formula for this. It's the debt divided by equity, right? So and after that you just need to explain about the current ratio. So going to the page number 172, so it's a current ratio. So current ratio, it comes around the current, and as the name suggests, the current assets and the current liabilities. It's a ratio of the assets divided by liabilities. Both should be the current, and the formula for this is current assets divided by current liabilities. Now you just need to just calculate the equity debt ratio and the current ratio. So if I see about this formula, putting these values. Like if I see the debt equity ratio, it's debt divided by equity. So debt and equity. So here it's a long term debt. So debt divided by equity. So for ACE, it will be 625 divided by 2100, and for PACE, it will be 700 divided by 2850. So this is the way of calculation of debt equity ratio. Now going back to the current ratio. So current ratio is the current assets divided by current liability. So current assets, it's 450 divided by 300, 550 divided by 375. This forms the current assets divided by current liabilities, which means the current ratio for ACE and for the PACE Limited. So this is the way you just need to explain it. So this is again a 500 words, a short one. So it's very easy to write it down. No need to explain too much into this. 300, 350 words, it's totally fine. Okay. The third big question comes is the face value of equity share of both the companies is 100 rupees 10 each. Calculate the EPS, which is earning per share ratio for both the companies, and advise which company will be recommended for the investment. Okay. So here you just need to understand and explain the concept of EPS. So going to the page number 136. I think it's okay. So if I go to the page number 136, so it's earning per share, which is the earning per share of the shares capital. It's an important concept, and it is simply used to calculate the values of the overall benefit or the profitable option. So the formula for this is profit and loss divided by the weighted average of the number of ordinary shares. So firstly, you just need to explain what is EPS. After that, you just need to just explain a little bit about the two types, like the basic one and the diluted one. And after that, you just need to just derive the formula and just explain sorry, the calculate the EPS as per the case study. So if I talk about the formula, it's profit or loss divided by total number of shares outstanding. So face value is rupees 10, so divided remains the same. And if we talk about the numerator, so numerator will be the net profit. The net profit will be 115 for ACE, and for PACE it will be 178. So definitely the higher the value, it's divided by 10, so it comes at 11.5 and 17.8. So 17.8 is definitely a higher value. So the higher the EPS value, the higher is profitable, and higher the value comes, and the company is more profitable, and we should invest more into that company. So a recommended one is the second one, which is space one. So this is the way how you just need to give an explanation about the EPS and just derive the formula and put it the values. So this is all about the third B question. I think all the three questions has been covered, and it's quite easy. The first and the third one is a numerical one, so you just need to explain the numerical. And definitely I recommend, if you are just calculating something, like if you are putting that current asset divided by current liability, so just explain where current assets will be this as per the case study, current liabilities will be this as per the case study. This will serve two purpose. The very first one is it will increase the number of words for this, the word count will increase, and secondly it will give a clean explanation, and the formula wise you are just explaining the things in a better manner. So this is just one last suggestion to you. And if you have any doubts or anything you want to discuss, then just feel free to just connect to me at ngasc.mba@gmail.com. And if you like this video, do like to subscribe and stay connected for further videos for other subjects. Thank you so much.